Hello, how to complete Form 1065, IRS Form 1065 for your LLC for 2021. So first you might want to go to irs.gov and search the form. And you just search Form 1065 and you'll download the form and the instructions for the form. And you do the same to search, and you might want to download Schedule B1 as well if anyone is more than own 50% or more of the business. And you'll search Schedule K-1 Form 1065 and you'll download the form and the instructions to Schedule K-1. So you download them, you save them. So you open your Form 1065. Part A is, what your business is about. So you'll add it, and you add the name of your business, the business address, and the business identification number on line D, and when you started the business, the date. So it's good to keep those in file, and the business code number. If you do not know the code, you have not used it before, you will find it at the bottom of the instructions to Form 1065. So it will be close to the end. Code for principal business activity and principal product or service. So you just scroll down to find your business. So if you have an online business and you sell to the user of your product, you are a retailer. So you want to, under retail trade, you want to look for non-store retailer, because they have a lot of stores under that section, non-store retailer, and you choose a number there that is related to your online business and you'll put it in your form. If later you change activities, you can just keep what you are using. You don't need to change it. So in this example, we are using tax preparation code number, and on line G, if anything there is related to you, you check it, otherwise you leave them alone. On line H, you check whether you are cash or accrual method, and number of Schedule K1, that's how many partners you have that you will file Schedule K1 for. In this example, it's going to be 5. If that's just you, that will be 1. If that's 2 people, then that will be 2. So Schedule M3 is not going to be attached, so we are not going to check it, and we are not going to aggregate or group activities, so we leave them blank. So line 1 will be sales. So where do you find that? You need to track your sales. So let's see if we have something open here. We can pull an example to use. Excuse me. Okay, so you need to track your sales. If you have a software that is doing it for you and you like it, that's fine. If you don't, you can use a spreadsheet to track, to enter your sales, your purchases, and track everything. So to complete that session though, let's just do it step by step. So they ask for total sales gross receipt. So that will be 6276. So let's enter 6276. Refund, I believe it was 493. So let's go back and check. Refund, so 493, and then we have total income. That'll be pretty much the balance. So let's go back. They say to subtract, so let's get our calculator here. So 6276 minus 493, 5783. So 5783. Let's just check the, yeah. So line 2, cost of goods sold. On our spreadsheet we have it, but it's good to attach form 1128, and we do have one open. So how do you complete form 1128 cost of goods sold? Add your business name on top with your business identification number and inventory at the beginning of the year. If it's not your first year, you purchase inventory before, then you'll have inventory at the beginning of the year. Purchases during the year on line 2, and the total from line 2 to line 5. You'll compute that, and inventory at the end of the year should come from your spreadsheet as well, and cost of goods sold will be the difference between your line 6 and your line 7. So inventory at the beginning of the year to complete form 1125A came from our spreadsheet. Let me just see if I can make it a little bit smaller here. So inventory at the beginning of the year 53, 55, and purchases during the year 45, 61, and I have cost of goods sold, but in the form it is calculated. So inventory at the end of the year is 8361, and that will calculate the cost of goods sold for you. So you'll take that number 55 to your form, and that'll be 55 and the gross profit will be minus 55 4228. Line 3 will be 4228, and you can compare it to your spreadsheet to see if you are close. And that's 42 to 7.97. Okay, so we do not have any entry on line 4 ordinary income or line 5, 6, or 7. Therefore our total loss or income will be 4228. So now deductions. If you don't have salary, you don't have employees, then you leave it blank because it's not for partners' salaries. As an LLC, you do not pay salary to yourself. So line 11, repair or maintenance. Bad debt on line 12, rent on line 13, line 14, taxes and licenses. We have 43, interest 1182, and then we have depreciation 236, 19 reported on cost of goods sold form, so that will be 236. And I don't know why I'm using 236 here. We can just use 334 if we assume it's not the first year. 334. So how do we come with depreciation? Okay, so you will complete, if you purchase asset during the year you are filing for, you'll have to complete form 4562. And form 4562, let me see this one. Depending on, let's just go to the beginning. We are not going to claim section 179, therefore I'm not going to talk about it. But pretty much you use section 179 if you want to deduct the full amount for your depreciable assets in the year you purchase them. It works in some instances, and some instances it may not be good for your business, because when you show negative number on your business tax return and later you want to apply for the loan, and you cannot count on your business tax document to convince the bank that you have a legit business, that can annoying you at that point. So, and if your business is young, you're not generating much profit, you might just depreciate those assets little by little, so that as you bring more revenue in, those depreciation will decrease the profit a little bit as well, instead of just claiming everything the first year. At least that's what I go with. And second, when you claim everything the first year and then later you don't use the asset for the full, if the asset is for 5 years and you don't use it for 5 years, the remaining of years that you didn't use it, you need to add it back as an income. And that's another form you had to file. You had to learn to file and file it. So, Form 4562. Enter your business name, enter the business identification number, and depending on the form, you might have to file multiples. So let's see if we have one open here. Okay, we just have one here. Okay, so for the year you are filing for, if you purchase assets, you can group them. If you chose not to group them, you'll need to file them separately. That's the way I do it, on separate Form 4562, instead of adding an attachment. The form is already there, I just use it. So I will, if in this example they are all related to retail, so where I put summary on the form, I'll put retail. But the thing is, let's go. The only place on this form that I like to use is Part 3. So Part 3, line 17 will have the beginning of the deduction, the depreciation deduction from prior year, and that you'll find it. I had to open another spreadsheet. You'll find it if you are keeping a good record of your depreciable asset year after year. You will pretty much track them, and you know that the year you are filing for, you just need to pull your document to see the amount you are going to claim for prior year, and that is 3467. But then you have 2020 assets that you will claim $63.76 for, and then you have 2021 that you will claim. Let me see if 2021 that you will claim 236.84 for. So if we go back to the other spreadsheet, 2021 tab will bring all those data to that tab, so that we can put together the deduction we are going to claim for 2021. That include asset placed in service before 2021, which total to 98, and then asset placed in service in 2021 and the total for 2021. Okay, so I will have a video on depreciation, pretty much to go through this spreadsheet to see how those rates are found, and those depreciation deductions are calculated in another video. But having those numbers together on the spreadsheet, then you go to your form, and the summary form will have that 98 for the prior year, and that will have pretty much the summary, because the summary will only be on one form. Even if you are using multiple 4562, and that will total line, different type of lines, including line 21, which is pulling information from part 5, listed property, the property you can use for personal and business. So, and the total will be 334, and that 334 we just found it here. And because we listed everything separately one by one for the asset placed in service during the year, the rounding had an effect on the total. So we are $1 short compared to our spreadsheet, which is okay. I still prefer to claim the amount that is lower than my spreadsheet. So I'm going to show an example on, we have the depreciation summary page, which I just showed you, and that will have amortization as well. And let's talk amortization. So a software purchase is depreciable for 36 months, or amortized for 36 months, or depreciable for 36 months using straight line method. So you can depreciate it, but because it's intangible product, I just put it under amortization. So, and pretty much the way it works is you put the amortization period, which is 36 for the software, and the number of months you use it during that year, which is 1 month, divided by 36 times the cost of the item. So that will give you $1.06. So we have $1 there. And the code, you will go to instructions for Form 4562 under amortization. They have code sections there. But they talk about the software more under depreciation. But because it's an intangible item, I didn't feel comfortable putting it under depreciation. So you have the choice. I put it under amortization. And it didn't have a code really. It was under 197 intangible, but was not. So it was an exception of 197 intangible. So I just and you will, let's see if we can pull the instructions. So amortization, you know, they have sessions. So you look at sessions because you code number because you add it, and 197 intangible has a lot of things, you know, and they amortize over 180 months, and that include startup costs and organizational costs that you didn't deduct in full the year you start the business. But it does not say anything about software really. So it has few things here and there, but then if you go under depreciation itself, that's where they mention it. So use your own judgment where you want to put it if you purchase software that you need to amortize or depreciate. So they said for property placed in service in the current tax year, you can either include certain participation for and residual in the adjust basis of the property or deduct those amount when paid. See section 167. You cannot use this method to depreciate any amortize. Okay, you cannot use this method to depreciate any amortizable. Section 170. 197 intangible. Okay, so that means you can depreciate it. You cannot use this method to depreciate any amortizable. Section 197 intangible. For more detail, see the instruction on section 197 intangible later. Intangible property other than, you see, intangible property other than section 197 intangible, including the following: computer software. Use the straight line method over 36 months. A longer period may apply to software leased under a lease agreement entered into after March 2004 to a tax-exempt organization, governmental, and all those. Okay, so that's is based on this you can depreciate it, because I'm kind of confused why they put the information about software under depreciation and not under amortization. But then section 197 is under amortization, and computer software is kind of exception of that section 197 intangible. So they say you can depreciate some amortizable, section 197. But there is a method they say you cannot use to do that. And they give you how many months you will amortize it, and using the straight line or something like that. But anyway, I put it under amortization because it's intangible and I didn't feel comfortable depreciating it. But I followed this rule, 36 months. So if we go back to our summary, and that's why I couldn't find a code for it, and I just put other than 197 intangible. But again, if you can depreciate it, I think, and again, you might have to put it under 3-year property if you have to. It's like the depreciation section has specific classification. So yeah, use the best judgment for your business. But yeah, so that's how we have amortization amount, and the amortization amount will go online on line 20. So now let's go back to our form. So we know how we come up with that. We can use an example. Because you only have one row for 5-year property, you have one row for 7-year property. If you purchase multiple assets that after you went through the depreciation process, you know that they fall under 5-year and 7-year property, you can only fit one on each row. So that's why we use multiple Form 4562. One form will have 2 assets on it, one from 5, one from 7. Another form will have 2 assets, one from 5, one from 7, and the rest will have only 1 asset, 1 5. So you might end up with like 15 Form 4562 for assets you place in service during the year. And among those 15, you'll have one that will be the summary, and that will have your prior year deduction, your amortization, and that will have your summary as well. So that's how we have 334 on line, we have 98, and we have 334 on line 22, and we have summary on top. But for the different additional Form 4562, we have just the activity that is going to use the assets, and we didn't have anything else on the form other than what we are depreciating on it. So no amortization, no prior year deduction, just the assets we are going to claim on it. So the basis of depreciation will be the cost you are going to depreciate, and I believe we are using those two numbers. So that will be 22 for the basis, the cost, and 5-year recovery, half-year convention, and straight line depreciation method, and the deduction excuse me, is $2. Excuse me. So we will go back 22 GDS 5 half year straight line and 2, and for 7-year we have 24 7 half year straight line and $2, and we have that, and no total, and we just do that for all of them, and then we go back and total each one of them, and the total will give us 236 or 236 plus this 98 will give us 334. Okay, so now that we have our depreciation, we will put it on line 16A, and that will go to line 16B. If you have anything on line 16B, then you do line 16A minus line 16B, and that will give you line 16C. Okay, so, and then other deduction on line 2011. So that 2011 will come from your spreadsheet where you track your expenses. An example is used here because you are using 1120S example. The line for deduction is different, but you total everything that is under other deduction and plus the amortization, it will give you 2011.40 cents. So you put 2011, and then total deductions will be the sum of all your expenses here, and that will give you 34.72. Let's check to make sure that is correct, though I don't think that will be correct. It should be 35 something. Oh no. So plus 334 plus 2011. Okay, so that will be 35.70. Okay, so ordinary business income, so you'll take 4,228 minus 35.70. So let's just do it this way. So that will give us 668, 658, and that's the profit. And then if something is not related to business, just leave it alone. So after you print the document out, you'll sign it and date it, and then you'll make copy for your business, for the state in case you need it for your state return, and then you mail the original one. And you can check no, IRS won't discuss your information with anyone else but you, and you leave pay preparer use only section alone if you are filing for your own business. Okay, so Schedule B. Schedule B, we have an LLC company, check on line 1C, and Line 2, pretty much really most of them will be no, some of them will be yes. So line 2B is anyone own 50% or more of your business. The answer is yes. If yes, attach schedule B1. And schedule B1, let's go look for it. If the answer is no, you don't need schedule B1. So schedule B1 must have some instruction at the bottom of it, but pretty much you put your business name on top with your business EIN number. You leave part 1 alone if no business is owning a portion of your business. That is 50% or more. You go to part 2 and then you enter the partners name, their social security, the country they are citizen, and their ownership percentage, and then you are done. It has some instructions here, and that will be attached to it. But if you don't need it, you don't attach it. You don't complete it, you don't attach it. So then you just continue reading and you check no for what is no, and then you arrive to line 4. Does the partnership satisfy all 4 of the following conditions? The total receipt, that's pretty much your total gross revenue. Like at the beginning when we have the sales, 250 is less than 250K. Total assets less than 1 million. Schedule K1 will be filed on time. You are not going to file schedule M3. So if it's yes for all of that, then you don't need to complete schedule L at the end of this form, schedule M1 at the end of this form, schedule M2 at the end of this form. Item F on page 1, item F, total assets that you'll find on your bank, on your balance sheet. You don't need to put it on this form. And you don't need to complete item L on schedule K1. So schedule K1. You don't need to complete item L on schedule K1. So you check yes and you continue reading. So no, you just reading, check those. And then you arrive to line 29. Are you electing out of the centralized partnership audit? If no, then you complete the bottom. So you put no, and then you complete the designation of the partnership representative section. If you are the representative of your LLC, you put your name, your address, and your phone number. If you are using the business to do that, then you put that business information. And schedule K. So 658 is our profit, 658. So we'll put on line 1. And pretty much because it's a trade, an active business activities that you are running under your LLC, you do not need to put much under schedule K. Everything will have gone on page 1 of your 1065. Therefore, you only put the profit, and that's the beauty of having an active business. Yes, you will spend a lot of time on that business, but at the same time you can claim the income against, you can claim the expenses against the revenue on page 1. Anything that goes on schedule K though, beside the rental properties, usually will flow to schedule K1 and to the partners. And by that I mean, if you put a revenue, an income on schedule K, and you have to put the expense related to that revenue in the deduction section, chances that you will deduct those expenses on your 1040 is minimal. So the good news with the rental property is it works on a form, and the profit or loss will come on Schedule K. So if you are doing something that pays you royalty, and your royalty income straight show up on income, any expense you put under deductions for royalty, your chances of deducting that on your 1040 against that royalty income is minimal. Any expense that will flow from Schedule K-1 to your 1040, chances are you may not be able to deduct it. In the past, it used to go on Schedule A of 1040 in an area that your AGI has to be, that expense has to be 2% more than your AGI before you know it will be a deduction. And I think some few years now they took it out of that area as well. So just keep that in mind. Yeah, passive income is great, but if it's not an active business, so that all your expenses are taken care of on page 1 of your form, and you have to report the income straight on K without the expenses, and the deduction will go on deduction section of K, you may not be able to deduct them all. Just keep that in mind. So you won't have much to do with Schedule K. We already claim all our expenses on page 1. And again, if you claim section 179 to deduct all your depreciable assets costs the year you purchase them, that won't show up online on page 1 under depreciation. You'll put on Schedule K, and that will flow to Schedule K-1, and partners will report that on their form when they file their 1040. Okay, so and since we do not have anything else, if you have interest, like money in the saving account for your business is generating income, it'll go under interest income, something to consider too. So I'm just going to skip through it. If you have any line that is related to your business, you might want to look into it. So analysis of net income. When you sum everything, it will be 658, like in our example. And that is storing line 1 through 11. Let's go back and check it. It's taking line 1 through 11 minus line 12D, and that deduction minus 16F. Let's see here. Oh no, minus 13D and 21. So line 1 through 11 minus 13D. Is that what I said? I think so. Other deductions. And then 21. Foreign tax paid or accrued. Okay, so and then that'll give you the net income or loss. So now line 2 of analysis of net income or loss, you have analysis by partner, and that's something I struggle with. The way IRS explain it, I just feel like it does not look right for trade or business activity that when you materially participate in. But we will go through that. So analysis by partner. So pretty much what they are asking is your revenue or income from Schedule K. You will break it down here between active or passive, and because our individual are the one owning the business, we are just going to narrow it to those two. But should we use active or passive? Frankly, for LLC members actively working in the business, I will think active, individual active will be the proper area to put it. But according to IRS instructions, you put them under passive. Okay, so, and that instructions, I would suggest you read it yourself. I would suggest you read it yourself to see how you understand it. Okay, so that's why it's good to pull the instruction. When you do not understand the line, just locate it and read it. So analysis of net income. So pretty much they say to report all amount for LLC members on the line of limited partners. So on line of limited partners, which will be 2B. But then they go on and say that in classifying partners who are individuals as active or passive, the partnership should apply the rule below. In applying those rules, a partnership should classify each partner to the best of its knowledge. To its knowledge and belief, it is assumed that in most cases, the level of a particular partnership participation in an activity will be apparent. So, which tells me that if a person is participating in the business, that person should portion of the revenue or loss should be under individual active. And if the partner is not participating, his portion of the loss or income should be individual passive. But then they explain it for general partners, which does not pertain to our situation. But let's read it. If the partnership principal activity is a trade or business, classify a general partner as active. Is the partner materially participates in all the partnership trade or business activities? Otherwise, classify him as passive, which makes sense. That's what I would have thought they will apply to an LLC as well. So they say classify as passive all limited partners in a partnership whose principal activity is a trade or business or rental activity. So all limited partners, I don't know if they're referring to those partners that are not participating in the business, or they are referring to partners from LLC, because they say to put amount for LLC members on the line for limited partners. But then they say to put passive, to put the amount under passive. We know the line to use already. Now to use the colon, they say to choose the colon, they say to choose the passive colon for all limited partners. So that's the area that I'm struggling with. If a business is a trade or business or activity, I don't really see why active partners should be put under individual passive. But according to IRS, that's where they say to put it. So use your best judgment after you read the instruction to see what area is best fit for your for that amount. And then you are done. You don't need to complete Schedule L. That's the balance sheet. But although it might be a good idea to do that for your own record, you don't need to complete Schedule M, and you don't need to complete Schedule M2. Oh no, you will need to complete Schedule M2 when, no, I think they say you don't need to. Yeah, you don't need to complete Schedule M2, and that is in the Schedule B. Yeah, you don't need to complete Schedule M2 if your total receipts and total assets are less than the threshold they mentioned. And then you are done with your schedule, or with your Form 1065. for 2021. But now, how do you complete Schedule K for Form 1065? Okay, so you download the form and the instruction, you save it and you open the form. So we are assuming we have two partners. So if you have two partners, you need to have two Schedule K1. So enter your business. It's good to download one. You enter the top portion that is, common data for both partners, and then you save that twice. That way you can just pull it and you don't have to retap everything from the start. So you put your business identification number, your business name, street, city, state, zip code, where you are going to send your return, and then part 2, and the top is what is common for all the business partners. And then for part 2, you put the partner social security number, the partner's name, address, city, state, zip code, and you can select general partner or LLC member manage. Is more for partners that are really active in the business and that are managing it. If they are not a part of the daily management of the business, they are laid back, you can select limited partners or other LLC members for that. And then you check H1 for domestic partners. So, and at the beginning and end, you'll have the same ownership if your business was not the first year. And in this example, we are using 50%. So Schedule L is not required, but yeah, at the beginning, you may not have. If that's your first year, then you'll have 0 pretty much for the beginning. You'll have 0, but then you have 50% here. So if that's your first year, and the beginning capital account will be blank if you are trying to complete it, but you are not required to complete it. And capital contribution during the year, you have to track your capital contribution, and you need to know the total amount contributed, and you know the amount contributed by that partner or that partner's portion of it. And the income, let's see, 651 divided by 2, 329. Okay, so, and that's how we come with that. So that the profit divided by times the portion of this partner will give you the income or loss associated with this partner, and the total of all of that, without, if you don't have any withdrawal or distribution, will give you the capital account at the end of the year. But again, you are not required to complete it. So did the partner contribute properly? No. But then you go to part 3. So part 3, if you have two members to file Schedule K1 for, then you divide Schedule K between them. So we have 329 here, which is half of 658 Schedule K, Schedule K amount. And if your partners are not 50-50, then you'll use the proportion to do that. To time it, we through find each partner's portion, and that one line 1, and that's pretty much it. We didn't complete anything, but if you completed something else on your Schedule K, then you have to complete it here on Schedule K1, like Section 179 deduction, for instance. If you have royalty revenue, then you'll put the portion that goes to this partner here as well, or things like that. Or if you have interest revenue, interest income, then the portion that is associated with this partner will be added there. And distributions will be 919. So that means you complete it online on Schedule K. But again, you have to read the instruction to the Schedule K1, because if there is a way to complete it, if more than one information will go on one line, how you will attach a statement to it. But in this example, because it's a trade and most of the expenses went on page 1, we calculated the profit or the loss, and that's all we needed. And that's how you complete Form 1065 for your business or your trade. And that's how you'll complete Schedule K1 as well. Since your Form 1065, you put information on line 20, other deduction, it will be good to attach a document. It's not just good, it's a requirement. Other deduction, attach a statement. So you will use your bookkeeping expenses information, and you can just group them on a spreadsheet if you don't want to really be that detailed. Where I have other deduction, it's not line 19 for 1065, it's line 20. But where I have other deduction, you can group them, still being well detailed, but group them on a spreadsheet and print it out to attach to your Form 1065. So an example of that will be this spreadsheet, which if you have to attach statement to your partner Schedule K1,